Hey guys, how you doing today? It's Riley, or the big thing in Aussie here. Today we got another stocks video. In this one we're going to be breaking down basically technical analysis and all the basic fundamentals to try and give you guys some knowledge on how to research your stocks. A lot of you might be used to more of a fundamental sort of way to research your stocks, which means looking at the company's financials, your PE ratios, earning per share, all that stuff. Industry outlook. Now that's what you call fundamental analysis. It's like, alright, if I'm gonna be a passive investor, invest over 5-10 years, I might prefer to use that sort of strategy of research. Whereas if you're looking to day trade or do really short-term trades and pick up on trends and patterns, then you're going to want to know what technical analysis is all about. So essentially, what we got here is 3 principles of technical analysis that I've come up with, and the first one, prices move in patterns in which the past can repeat itself. So you always got to know and be able to check out the past to reflect on what might happen in the future. 2, basically all known fundamentals of business are factored into the price already. So forget these sort of things and just focus on price patterns and what's going to happen into the future. The third principle is just going to be there's always an element of risk involved. So minimize your risk by using strategies, indicators, and ideally look for like a 1-to-2 risk reward ratio. So yeah. Okay guys, now we're just going to jump over onto this website we call TradingView. Now that's just a researching website that I've been using. It's really good for just looking at all the charts and whatnot, but yeah, basically I'll break it down how this works. So you get onto TradingView, you're just going to want to open a free account. I've already got one. I mean, you get some ads in here and there, but it's not the end of the world. So basically you get all these news, you get like a watch list over on the top right. So if we go ahead and we go into a stock like something like ANZ, we'll get that up. So basically what TradingView allows you to do is, when it loads, here we go, it gives you a stock chart, it gives you like technicals. You're just going to want to click on the full featured chart like that. If you did want to have a look at this sort of stuff, you get all the financials. You can click over here on technicals and get sort of some insight into what's going on in the technical analysis of this. So you get all like the price, like there's indicators and stuff, and you can look down. These are all like some of the terms like RSI, moving average. This is all some of the stuff I'm going to get into in the video, but yeah, this is just what you can find on TradingView. If you go over to the full featured chart like I showed you before, so right here I've already got my sort of chart set up. I'll get rid of everything to make it look bare bones like your guys will. So essentially this is just a line chart. It's just showing the price. I think this is of just today. The market is currently open right now, so you can change sort of like what sort of chart you're looking at. So if you want to look at the 6 months chart, that would be it. 1 day chart we'll use today. You're going to want to go over and change this to candles so you can get your candlestick chart up. I'll zoom in here a bit. I'm not using my mouse because I got too many accessories plugged in with my laptop, but essentially get ads here. You have, oops, go away. You have all these charts, basically candlesticks. Green means, so this is a 1 minute chart, so it's changing every minute essentially. So in that minute the price grew up when it's green, and when it's red it went down. Pretty simple guys. But basically we're going to start breaking down all like the technical analysis, indicators, and all that good stuff. So basically a support is what you call a floor on a price or on a stock's price, meaning that when the stock price is going down, like we'll use this point for instance, that will be a area of support as you see the price falling, and at this point there's too many buyers that are waiting to buy in at that point, that there is a massive sort of a reversal in which they will start buying in and the stock price will go back up. So that's what you call a support. And now over here, this is an example of resistance. So you can see when the share price starts climbing too high, it hits a certain point where there's too many people waiting to sell at that price. That is what you call resistance. So it'll hit that point and then it'll do a reversal and start going down. So maybe this isn't a great example, but essentially one of the basic rules of technical analysis is that previous supports become new resistance and previous resistance become new supports. Maybe if I find another example, so here this one here, that's what you call a support, and it hits the resistance, comes down. So now it's in like a bearish trend here, and then you notice that this level here, alright, just put another line over it there. So that becomes the new resistance, where it was a support. So it symbolizes sort of like a downward trend. However, this way of analyzing is not really good enough because there's all these other indicators that you need to use as well to sort of gauge if it's a good idea to buy in or not. So the first one we're going to be talking about is volume. So essentially, as a price increases and volume increases with it. So volume is essentially, so as the volume increases, it shows interest and demand into the stock, which will further increase the price. When the stock price increases but the volume decreases, it shows a trader's indecision and could decrease in the price. Essentially, volume is just a basic indicator of all types of stock research. You just want to go Google volume and sort of find out on your own about that one. RSI, that's one we're going to chuck in right here. So we'll go over indicators and strategies. You just want to type in RSI. So that's the relative strength index, and that's going to come down below. So essentially the RSI compares price momentum against price. So God, these ads. So overbought when it's above 70%. So that should be this line up here. That's 60. That's getting high, and then it's overbought when it's above this point. And when it's oversold, it's below 30. So down here, when it's overbought, it may mean that a potential downswing is going to happen, and when it's oversold, it may mean that a potential upswing could happen, just based on volume and RSI. So the next thing we're going to be talking about is the float. So we can go here, type in float. You get sort of an indicator like this, where it's actually charted above the line. So essentially what the float is the number of shares available to trade. A low float has little shares for trade, and when there's a low market capitalization and a low float, it basically means that it's volatile. High float equals less risk. So when there's more shares available to trade, there's less risk, if that makes sense. So it looks like it's above the price line. Sorry guys. Basically meaning that it's not super risky right now because the float's high. Next we got a moving average, so we can go and put that in here as well. Moving average. Now there's also an exponential moving average, but we won't get into that today. I'm going to get rid of the float now, and now we just have the moving average on our chart. It's this blue line, it's sort of going everywhere. It helps smooth out price action by filtering short-term price movements. So that's essentially what the moving average does. An increase in the moving average signals an uptrend, whereas a decrease in the moving average signals a downtrend. So you can see that here it's above the price line, so it essentially is signaling that there could be a change in momentum, but you need to use the moving average in conjunction with other strategies. The next one we're going to be talking about is what you call the Vwap. So the Vwap, I forget what it stands for right at the moment, but essentially the VWAP is just an increase. So VWAP is just a line in which when the VWAP is increasing, it means an uptrend, or when it's decreasing, it means a downtrend. You can't rely on this like by itself. Same with any of these indicators. You need to use them in conjunction. When you get all these indicators signaling a buy, like this sort of page that I was showing you, this is just for Apple, but yeah, when you get these sort of indicating good, bad, you need to use them all together to sort of come up with your decision at the certain price level. But you can see that the VWAP is sort of trending down. It's much higher than the price level at the moment. So other indicators that I could show you would be like a MACD. Let's get that one up. Yeah. And essentially you get two sort of lines. One's the MACD, one's like a price indicator. And when the MACD is higher than the price indicator, then it's good and it could signal an uptrend. Basically, that's how these things work. You sort of have to go and research them yourself because it's sort of pretty difficult to explain. But essentially you can tell that when there is a very bearish trend, like here, everything's going down, VWAP's trending down, and you're basically just looking at trying to find a pattern, trying to find an area where you can predict that the price is going to suddenly take off. Now essentially why stocks move, there's a few different reasons. Like news, like when the Banking Royal Commission came out, there was like a very big shock to especially all the big Aussie banks. They actually rose after that sort of public announcement that the commission came out. So that sort of like shocks the market in a sense that there's also like pricing patterns, like I'm trying to show you here. Then there's trading momentum and market or sector movements. This is just all stuff that causes these stocks to move. But yeah, guys, try and use these methods, do a bit of research yourself, and hop onto virtual currency trading sites. You know, like Plus 500 is a good one I've shown before. But yeah, there's other sites out there. Start trading fake money before you're going to trade your real money. And if you're going to use if you want to trade like NASDAQ stocks, there's also Stake, which is a nice sort of website to use. Also, like my inspiration for this sort of like YouTubers like Ricky Gutierrez, Tony Ivanov are very good at explaining these techniques, which I'm trying to learn and teach you guys. Basically, it's complicated stuff, but if you're patient with it, it can pay off and you can really sort of get your head around it and figure out how the markets work. But yeah, guys, that's going to be it for the video. Hope you enjoyed. Hopefully that explanation wasn't too bad, but yeah. Anyway, have a great day, guys, and peace.